Good afternoon, everyone. We will get underway in just a couple of minutes. We'll give some time for a few more folks to join, and then we'll be underway. Okay, it does look like we have a quorum, so we might get underway, if that's okay with I guess my team. So hello, everyone. It is great to be with you this afternoon. By way of introduction, my name is Rob Stoneham. I've been working in the NetSuite ecosystem since early 2013. Some time ago, I joined the Jcurve team to help companies navigate their way from using multiple small systems in various states of connectedness, you might say, to the highly capable and almost all-encompassing NetSuite Jcurve platform. Now, I say almost because, as with any business platform, there's always going to be some things that it doesn't natively cater to. In the case of NetSuite, whether it's the Jcurve edition or the full edition, one of the areas it doesn't offer is deep, intuitive cash flow management, specifically things like accounts receivable, allocations, debtor management, and credit risk considerations. Now, we all know the critical nature of cash flow in today's economy, making sure you've got enough coming in to pay salaries, pay your suppliers, and make investments decisions to help grow your business. And the best way that I've found to achieve that is by adding the ezyCollect AR platform into your Jcurve NetSuite environment. It's the perfect combination of a robust business platform and an intuitive cash management platform. Jcurve and ezyCollect team have been working together for quite a number of years now. And to take you through the value that can be achieved through both platforms working in harmony, I take great pleasure in introducing you to Graham Bowers, who is the channel manager at ezyCollect. Graham, in just a few seconds, I'll pass the mic to you. Just a little bit of housekeeping before I do. Any questions that you all might have as we go through, please type those into the Q&A box at the top of your screen. At the end of the presentation, we'll work through those questions, just make sure all the those loose ends have been tied up. Please be assured you will receive a copy of the presentation following the webinar. And Graham, with that, over to you. And for you, please feel free to add in any extra background details that I may have missed. Thanks, Graham.
Thanks, Rob, and welcome everybody. I'm going to focus today on giving you some insights into accounts receivable automation, risk, and payments through the ezyCollect eyes, but I'll also be giving you some advice and some tips and tricks that you can take out with you. A little bit about me. I'm, as Rob said, the channel manager for ezyCollect. I've been there for 6 years. I'm a qualified accountant, but that was in Victorian England some 300 years ago. So it's been a while since I've actually keyed an invoice in or chased money, but I'm very familiar with it. I have a lot of experience in ERP systems and debt collection and receivables management. I work very closely with partners like Jcurve, and my mantra has always been, when I've been general managers and running companies and running my own business, that a sale is not a sale until the money is in the bank. Too many companies get excited that they've met their sales budget for the month, but it really doesn't count until the cold hard cash is sitting in the bank account and you can see the value of it. So getting paid in 2025 is probably the most difficult proposition that a lot of medium, small and larger, not corporate so much, larger enterprises have, simply because people are using you as a bank. And so your suppliers are pushing you out, so you're pushing your suppliers out, and you're constantly struggling to work out where the cash is coming from. Now, unfortunately, current assets contain inventory and accounts receivable because they're the only things that can be quickly turned into cash. You can either reduce your fire sale, your inventory, or you can make sure you're constantly on top of overdue accounts and you're not onboarding bad risk and more bad debt. So what are we going to be looking at today? Well, we're going to look at how automation can accelerate that cash collection model without adding headcount. And so you can scale your ability to sell more, invoice more, attract new customers, but the collection model doesn't include having to employ another 1 or 2 people, which are very difficult to get. I've spoke to a number of clients over the last few years that have onboarded ezyCollect because they can't find good staff, they can't find people that want to do collections, and this has been a game changer for you. We'll talk about why a self-service customer portal can change the game for you. 25% of people transact payments outside of 9 to 5, so we never put barriers in the way of payment, so it's always important that there's a way that people can pay you immediately. We'll look at really, and this is an often ignored part of automation, how we assess risk. Surprise the number of people that still use paper or email type credit applications for new business, and people put 3 credit applications on them and they look at them and go, call them up and they go, yes, fantastic, they're a great company to deal with. And those of you in AR, if you can look at me and tell me that if you've ever had a bad reference from a credit application, I'd be very, very surprised. Then how that risk analysis flows into data analytics and how you can retain your best customers. And then the real game changer in payments is how we can use direct debits for existing customers, but also for new customers to make sure that you are always paid on time going forward. So ezyCollect makes life easy for you and your customers. You don't have to spend valuable times on repetitive manual tasks. ezyCollect automation will collect invoices irregardless of their size and irregardless of their status. So it's a constant evolving model that makes sure that no one gets overlooked. And I like to call it the squeaky wheel, or polite, persistent insistence. So you never, ever, ever overlook something that is due. I don't know whether there's any of you in the audience today that are in AP, but I've worked in AP as well, and those of us who are really skilled in AP can always push an invoice due date out by 30, 60, and if we're really good, 90 days. Unfortunately, the checks in the mail is not something we can use anymore. That was a really good one 20 years ago, but there's always ways of, I'm sorry, I don't have a copy of that invoice. Oh no, sorry, Jan's not here today and she won't be back for 2 weeks. Oh, if only you'd got that into me yesterday, you've just missed the payment run. So by using the workflows within ezyCollect, we constantly work out by pre-reminders, constant reminders, SMS follow-ups, that you don't ever get overlooked. And when people know that you are not going to overlook their outstanding invoice, they tend to pay more promptly because they know it's not going to be forgotten. They know that something will be constantly said. So what can you expect with ezyCollect from Jcurve? 67% improvement in average in DSO and average days overdue, and almost 11 weeks a year given back to your staff. The savings quite often are 14 to 20 hours a week, just in that constant chasing money, which really, when you think of it, is an overhead that your business shouldn't really be having, because you deserve to be paid. You've provided the goods, you've provided the services, you've tendered an invoice, and you're not a bank. And so it's very important to keep things constantly moving so no one is overlooked. So how does ezyCollect work? Well, it works with the API into Jcurve. It was one of the very first ones we did 12 years ago. Jcurve is always the source of truth. We use the API, we pull the information out on a regular basis, either daily, or we sync as often as that you would like. And so what we do in ezyCollect is we apply Dunning rules, automated workflows, payment management, credit scores, credit applications, and dashboards, so you've got a constant oversight. So ezyCollect becomes your debtors management system. And a lot of ERPs have great reporting in terms of age payables and balances and what invoices are due, but they often lack subtlety and the ability to get the nuance around that to really get money in the bank faster. So what are automated follow-ups? Well, automated follow-ups, they really just are a way of putting intelligence into the way that we approach outstanding debts. So the first email that we'll always send someone is usually 7 days, 5 days in advance, and go, "Hi Bill, this invoice is due on the 25th of July. Hope it's in your system ready for payment. Any issues, please let me know." Or however you want that tailored. All of these communications are tailored down to a customer level. So you can treat old customers who might not like technology, they're at retirement age and they've been with you for 15 years and you really don't want to be sending them this email. You want to tailor it and get a little bit more friendliness into it. Everything is tailored down to a customer level. The second follow-up goes out automatically, maybe 10 days after due date, and says, "Hey, what's going on? You need to pay me." We'll then schedule potentially an SMS that goes out, and that's tricks of the trade that I tell you to do now is always ensure that the accounts person or the purchasing manager or the person who's authorizing your invoices mobile is part of the credit application. So you hold that data. SMSs are very, very powerful, but 90% of people don't hold the accounts person's mobile for some reason. And so that is a very important little trick to make sure that you've got access to get to people quickly. Then we'll schedule a call because ezyCollect still has to have humanized collection. So the first email didn't work, the SMS didn't work, you still haven't been paid. We'll then generate an automatic task list. And if you're the manager of AR, you can see what's due to be called today. So you can keep an oversight on whether someone was called or they wasn't called. Did they reply? Could you not get through? And so what that does is allow the humanized component of it. And usually by the second email and a call, you'll find that 70% of the overdues have been collected. What it then does is when you start to put this process in and people recognize it, it becomes more automatic and people know that you're going to call them. People know that they're going to get it once they get the SMS that it's time. If they're being a little bit reluctant, it's time to pay. So the other brilliant thing about when we send out workflows is that we don't spam people on an invoice by invoice level. So everything that we send out, we will consolidate it into a single email. Okay, so it's branded with your logo. All the communications look like they're yours. They come from an email accounts at jcurve.com.au, so that they come from a company. They don't come from a third party, which can get trapped in spam folders. And every email that we send out says, "Hey, these are the invoices you owe. These ones are overdue. These ones are coming due." And all a customer has to do is click this button to pay now, and they'll go to a customer portal that allows them to transact with you without ever talking to you. Okay, so it's really easy and it's great. The same with texts. We'll send out a text and say your invoice is $7 overdue. People from within a text can click a link and it will open the payment portal and it will allow them to pay that invoice via a text as well. So very powerful. No, second tip of the day, never put barriers in people wanting to pay you. "Oh, sorry, the accounts clerk's gone home at 3 o'clock. We can't take your payment." Never put barriers. When someone wants to give you money, work out how to take it. And that's the beautiful thing with the payment portal. It allows you to take payments 24/7. So again, paying on time. If I had a poll, I would ask the AR people here, what is the bane of their life when they're chasing money? I know it was the bane of my life. Can everybody see the screen? Yes? Okay. The bane of my life when I was an accounts receivable was you would call someone and they would say, "Oh, I'm sorry, can you send me a copy of that invoice, please? So then you've got to go into the ERP, you've got to find the invoice, you've got to create a PDF, you've got to put it in an email, you've got to send it to them. With ezyCollect, they can just view or they can download the invoice. So anybody that comes to you and says, can I have a copy of the invoice, please? Say, sure, can you just download it, please? It's in your portal. And these are encrypted portals. Everybody can log into their own portal. And again, they see everything that's available to them, what invoices are due. Now they can pay in full or they can part pay. So someone, for example, on this particular case owes you $13,500 and you may have called them and they've said, oh, I'm sorry, Gene, I've got payroll. Can I give you $5,000? No problem. Or they don't even call you and ask that, they just select $5,000 here and pay. Now, the second bane of anybody in AR's life is when people just give you $5,000 and you don't know where the invoice goes. They don't send a remittance. They just said, you asked me for money. I've given you $5,000. What more do you want from me? But you don't know where to put it. When they pay through this portal, that $5,000 automatically gets written back in real time into Jcurve. Invoice 002 is settled, or the $5,000 is allocated to it. You never have to worry about posting invoices later and posting payments, doing bank recs. So people can pay by EFT, people can pay by credit card, people can pay by direct debit. And so my recommendation to people at the moment is that all new customers you onboard should be on direct debit. It's all controlled from within the portal. They get the same reminders, but what happens is Jcurve says, oh, this invoice for $9,820 is due on the 18th of July. And it just goes, gets the money, settles the payment, writes it back into the debtor's ledger. No touch, 0 days late. Now, a lot of people say to me, oh, I don't think our existing customers would handle that. And I go, well, there's ways, there's methodologies around that to do that. But with all new customers you onboard, if you have this payment portal, you can set them up with a direct debit. And it just makes life so much easier for you. It really does. We send out a reminder email 7 days in advance and we'll say, invoice 102 for $9,000 is due on the 25th of July. It's a direct debit. Please make sure that you have funds in the account to settle it. It's the same with promise to pays or payment plans. When people say, oh, that $15,000, could I give you $3,000 a month? And you go, okay, that's acceptable. You can't have any new credit, but you have to pay that off at $3,000 a month. How often in your experience do they pay the first one and they might pay the second one and then you've got to start chasing them again? Well, with ezyCollect, we allow payment plans, but they've got to sign a direct debit. So we say, great, on the 18th of every month, we go and get that $3,000. The moment that is not honoured, ezyCollect starts chasing again. When someone's on a payment plan, it's pauses chasing because there's nothing more annoying than if you've agreed to pay $3,000 a month and you're paying it and you're still getting reminders sent. So that's paused. But the moment you've got a brilliant red flag here, they've paid you 2 payments out of 5, the third one fails. Right, all bets are off. We want the remaining $9,000 from you today, please. And so you get a lot more oversight and a lot more ability to manage your book based on what's happening with the direct debits. Same with new customers. If they're on a direct debit and the first direct debit fails, you go, well, really, you shouldn't have credit. How many new customers have you ever had? Think back. They look good on paper. You give them a $10,000 credit limit. They pay the first month. They pay the second month, and then it starts to slip. And by 6 months in, they're 90 or 120 days overdue. Now, I know a lot of you will automatically cut their credit, and that's fine. There's always ways of doing things manually, but ezyCollect controls all of that. And so just finally, allocating payments. When everybody pays through the portal, you don't have that problem with having to post the invoice. You don't get your bank rec default the next day, and you go, okay, there's 27 payments have come through now. I've got to post them. Oh, I didn't get a remittance advice from that. Oh, that's just going to have to sit as an unallocated payment because they've just sent me, they owe for 12 invoices and they've given me 12,750, but it doesn't quite fit. And I can't really allocate it to the oldest one because then if they haven't paid that, then that's going to put my debtors ledger out. So all the payments that come through the portal, right back. So the other thing you've got too with ezyCollect is you've got oversight. You can quickly and easily see down to a customer level, down to an invoice level. You can see notes. The notes get written, any notes that you make in ezyCollect get written back into the notes in NetSuite as well. So they're visible by all NetSuite users who have access to the debtors ledger. So you get a much easier portal to work with. Okay, and it'll show you overdues, risk. And then you can be flexible with special circumstances, right? You can exclude classes of customers. I know that those of you that deal with Coles and Woolworths and Aldi and Bunnings and the government, I could send them 500 emails and 200 text messages, and you could make 700 calls to Coles. If Coles tell you they're going to pay you on the 30th of August, that's when you'll get paid. So it's one of those things, so we can exclude classes. So you can say, look, don't chase Coles or Woolworths, don't chase these corporate clients, don't chase these government clients, but chase all the other people. Okay. You can pause reminders on a customer level or even at an invoice level. So if someone's disputing an invoice, you can tell ezyCollect to stop chasing that invoice, but it'll still chase the other 5 or 6. And people can lodge disputes through the portal directly with you or give you a note, and then you can take action based on that from within ezyCollect. So you don't have to be swapping between systems. Okay, you can do all that from within ezyCollect.
Just a quick pause there, Graham, if I may, and I apologise. I wanted to check that everyone can still see the screen. Someone seems to have been having trouble seeing the screen. If you're not able to see the screen, then maybe you could just drop a note in the chat. Otherwise, we'll keep moving forward.
Okay. I can always unshare and reshare if that will help, but
yeah, maybe just do a quick unshare, reshare.
Okay. Is it back by magic?
Yep, that looks back again. Thanks, Graham. Again, if anyone can't see the screen still, please drop something in the chat and we'll see what we can do to help.
So the other thing with ezyCollect too is you've got dashboards. You can see escalations pending. You can see overdues. You can see your aging and distribution. So it's really quickly in front of you. And you also get an at-risk criteria. So you've got 39 customers that are yellow. There's 157 invoices that are being warned about. There's 524,000. So you do get a lot of metrics across the top of it to help you manage your book. The other big thing too is about not onboarding risk. And this goes back to what I was saying 5 minutes ago, which was, somebody just fills out a PDF and they say, here's my credit references, and everybody calls them and yeah, Rob's a great person to deal with, fantastic company. Yeah, give him, if he wants 10 grand, give him 10 grand. We don't quite accept that. And so what we do is we start off with an electronic credit application, which gets sent out of ezyCollect to new customers. It's populated from ASIC, so we know they give us the ABN, so we know the directors' names. We provide you with a basic credit score, and so you see immediately what the score is. We pull in over 1 million data points from Ilion, which used to be done in Bradstreet, and I believe it's now been renamed again. And those data points enable us to score your customers. And so you get a credit report that shows you what their score is, what their failure risk is, what their ability to pay risk is. And so, yes, you can call the 3 credit references just to verify, but we pull in a whole bunch of information from the market to let you know what's going on. And so the risk is quite interesting because it scores customers 4 ways. There's a green, which you would anticipate, which is they're paying you and they're paying everybody else. Terrific. Keep dealing with them. They're great people. There's an orange, which is they're paying the red. So I'll jump to red. I'll start from each end. The red, of course, is they're not paying you and they're not paying anybody else. So I suggest you work out how to get your inventory back. I suggest that you do major pressure to get them paid, immediately stop their credit, and make sure that you do what you can to get paid, because their risk will be very, very high. They're paying you, but they're not paying anybody else. And again, you can see this from the dashboards. What that says is you're the supplier of last resort, you're mission critical, or you're the last supplier. They've exhausted everybody else, so they're paying you just to keep your goods and services flowing. That's another big bad sign as well, because it's only a matter of time before they stop paying you. So you can see how metrics start to enable you to get ahead of the curve, so you're not suddenly saddled with someone being 90 days delinquent, even though you've tried to get the money out of them. You can take action at 30 days, for example. The last one is the really interesting one. They're paying everybody else, but they're not paying you. Now, that's something that you hand over to account management straight away and say, hey, we need to get on top of this, because if they're not paying us, why not? Well, someone's annoyed them, the invoices are always wrong, you're supplying the wrong goods, you're hard to deal with. Whatever those factors are that cause someone to not want to process your invoice. And we all know, once you lose a customer, it's really difficult to get them back. It's a lot easier to save a customer. And so those sorts of metrics tell you to account management problems. So they help with customer satisfaction as well, because you can see that they're paying everybody else, but not you. So you can immediately call them and say, hey, is everything okay out there? Is there anything we can do better? Oh, well, Rob, mate, every invoice you send me, the prices are always wrong. We're on a special pricing, but no one over there seems to understand that. We always get the normal MRR and we've got a 20% discount, and I can't be bothered. And so you get on top of those things as well, which is really, really great. So that's how you use risk with automated payments, with automated workflows, to give you that whole way of reducing the time you have to spend and using available data to make life easier for you and get collections in easier. These are just a few logos that we've got, the people we deal with. There's ezyCollect, a little bit of potted history. We've been going about 12 years. We've got 1,300 customers, predominantly in Australia and New Zealand, but also smattered throughout the rest of the world. We're expanding into the United States at the moment, so we have boots on the ground there, but our support and our implementation is all Australian. We're an Australian organisation. NetSuite is probably our favourite ERP because the API is very stable and it works very well, and so we always enjoy doing NetSuite new customers. It's very predictable. So even without ezyCollect, what can you take out of today? Well, automation techniques and tactics collect invoices faster. Dunning letters don't work. Good AP people can recognize a system-generated Dunning letter from, I don't care where it's from, NetSuite, MyOb, Xero, it doesn't matter where it's from. There's something samey about it that AP people can recognize. Giving customers better payment tools. It does improve relationships. I put a system into a food company not long ago, and they were pulling their hair out because it's all prepay. And so the chef was away for the day and the owner was out in the kitchen, and so he didn't bother paying for anything. So the cold storage was backing up in the warehouse. No one could ship any goods because no one had paid. So we basically put the whole of their customer base on direct debits, and their customers went, oh, this is such a relief. That's one less thing I as a customer have to worry about. Once the invoice is due, you take it. We also embed pay now buttons on sales orders. So if you're doing prepays or people need to pay prior to the goods being shipped, the payment comes in on the sales order, and then it's written back against the sales order. So the moment you see the sales order is 0, you can immediately pick pack. Or you can talk to Rob and say, Rob, I really like this automation. It's a big word, but I really like it. How about when the payment's made against the sales order, can you just put a little trigger in there somewhere and create a pick pack slip automatically in the warehouse for me so I don't even have to think about it? And Rob will go, sure, I can do that. So you don't just stop at an automation level, work out how that automation can lead to more automation within NetSuite to again make life easier. Now, I've worked in warehousing, and one of the big things that warehouse people hate is the truck comes at 3 to pick up all the goods, and you're suddenly giving them things at 2:20 because you haven't realized that the person's paid the sales order, and you're rushing down to the warehouse saying, oh, this has to go today, whereas we could have automated all that. So think about how automation can improve the process. Okay. The other big thing is customer risk. There is a way now of assessing it. Credit scores, digital credit applications, using direct debits to ensure that customers that you're not sure about are on a way that you can get money out of them on due date, or you know about it immediately. Okay, so those sorts of things you should be thinking about as well. And with ezyCollect, you get that. And I think I read this a while ago, and it stuck with me like a sale's not a sale until money's in the bank. You cannot sell your way out of cash flow problems. All you do is increase your cash flow problems. Survival isn't about selling more, it's about collecting faster. If you're not collecting what you've already sold, there's no point selling more. You just make the problem bigger. So if you take one thing out of this, it's you cannot sell your way out of 30, 60, 90, 120 days overdue, or $500,000 sitting in outstanding debt that should be in your bank. So they're the little takeaways today. I'm more than happy to take any questions. I tend not to drag these on for too long because I know that everybody's time poor, and especially on a Friday afternoon. Oh, what is it? 3 hours to beer o'clock. So I don't want to start crashing into that time for you.
Thanks so much, Graham. That's really informative. I think I'd also mention, just to append your talk track there, that the integration and the interactivity that ezyCollect has with Jcurve and NetSuite means that your dashboards and your reporting is updated in real time from ezyCollect. So the visibility that you have as an executive or a manager into payments and cash flow, even when you're only accessing the NetSuite dashboard or the Jcurve dashboard, is always up to date. And so the confidence you have in your cash position is elevated. The same is also true for salespeople who might not, well, probably wouldn't use the ezyCollect application. So they don't continue putting sales through for customers that are on credit hold. With that point made, there are a couple of questions. So the first one comes from Aisha. Thank you, Aisha. Does the portal allow customers to apply a credit memo during payment?
No is the short answer, because the source of truth is NetSuite. And so we can take up credit notes, but the credit note or the credit memo must be raised in NetSuite, because otherwise what you've got is people potentially not authorized to be raising credit notes. And you don't want customers, if customers think that they're due a credit note for $150, they can short pay by $150. But the credit memo must always be raised in the NetSuite, but it does not show in the portal. So it's one of those things that's in the roadmap, because we've done testing on it to bring those credit memos through to show them. and I know this is particularly important sometimes when you give rebates. Rebates are a big one, and customers want to actually apply a specific rebate or a specific credit. So it's a very good question. It is on the roadmap because it has been raised before. I just don't know when, so I can't tell you, oh, it's going to be the next quarter, because I'm not au fait with when it's due to come out, so I don't want to mislead you.
All right, thanks, Graham, and thank you, Aisha, for the question. It's a bit of a watch this space answer in that case. Now, there is a question about fees. We'll come back to that in just a sec. I do want to ask, Graham, are you able to offer incentives via platform for early payments?
Again, that's controlled by NetSuite. So, Rob, you could probably address how early settlement is done, and you would then trigger it based on the payment. Again, weirdly enough, and I'm sorry to say this, it is on the roadmap because it is one of these things that people say, oh, well, we just want to put an early settlement discount in the portal, and then people can automatically deduct it. Now, never forget, though, the beauty with the portal is that customers can pay a specific amount. They're not locked in. So if they know that they're paying this 3 days before due date and they're entitled to a 2.5% discount, they'll take it. Then you will obviously notice the difference in the invoice and go, oh, that's early settlement. In my experience, most people are very aware of what they're entitled to and will never overpay and then go, oh, hang on, I paid that by mistake. I should have taken 7.5 off. And even if they do, if they're an ongoing customer, you can adjust it the next time. But the flexibility with the portal is people can tell you what they're paying on each invoice, and that's the beauty of it. So if they want to deduct a credit, they can put a note to that effect. If they want to deduct an early settlement, they can put a note to that effect. It does give them flexibility. It's not perfect, I know, and it'd be great maybe in 6 months' time I'll be saying, yes, not a problem, we can do credit memos, and yes, there is early settlement. But Rob's team would look after the early settlement calculations. It's probably a out-of-the-box thing with NetSuite, and then that would be the amount that we would be looking to collect.
Right, great. Thanks, Graham. Look, I guess one of the key takeaways from your talk from me was that communication is clearly one of the absolute keys to the AR process. In your experience, where do you find you get the most traction from your platform in getting customers to pay on time? And you've gone on mute, Graham, for some reason.
How's that? The traction comes from repeat business, if you like. It's being, remember, polite, insistence, and persistence. Letting people know that this debt, this outstanding invoice, this amount will not be forgotten or overlooked. A lot of people, if you hold out long enough, then they'll go on to other things. Or I've come across people that have got 150,000 in their book. The invoices are all under $1,000, and no one chases them because people want the 15 and the 20 and the 30,000s. But when you add up all the under 100,000s, you've got a couple of 100,000, but no one's looking at them. So the traction comes from repetitiveness. Constantly, this invoice is due in 7 days. This invoice is now 10 days overdue. Hey, I've got an SMS that says I still haven't forgotten about your business. Hey, Rob, I'm calling you saying, where's that invoice? And what it does is it creates habits in your customers that say, just pay Jcurve because I know that they won't overlook this. So the squeaky wheel gets the payment. And that repetitiveness gives you the constant traction. It's interesting. We've had people that have signed up for ezyCollect, and 6 months later they come up and they go, we don't need this anymore. It's great. We've got like 1 or 2% overdue. We can manage that. It's perfect. And then 4 months later, there's a knock on the door and they say, is it the same price as last time? Would you mind turning it back on again, please? Because we've stopped. We've got no traction, right? We're just spinning our wheel in a wet patch on the side of the road, and people aren't. They go, well, that's interesting. They're not chasing us anymore, and that's the traction, the constantness of it.
Yeah, that's a really good answer, Graham. And I guess the that repetitiveness and staying on top of that is a lot harder when you don't have an automated platform to take care of it. So thanks for that. Look, just one final question I have from Cassie this time. What are the fees for ezyCollect? How does the fee structure work?
ezyCollect the pricing is based on the number of active debtors. So if you run an age trial balance, there's usually 32 a page, and if you've got 12 pages, that's 360 debtors. So we have breaks at 200 to 500, 500 to 1500. The sweet spot, what we find is that most people are around about the 500 mark. So ezyCollect will, at 500 active debtors, it's a monthly recurring fee of $8.50, and then there are credit card fees, transaction fees on any credit card payments that are made through the portal. Now they can be absorbed or on-charged. Now, given what the Reserve Bank is doing at the moment, I'm assuming that we're all now thinking about how we absorb them and how we adjust our pricing to incorporate that. But at the moment, that's not going to happen for a year or more. So those can be on-charged or absorbed, or a combination of both. You choose. But the $8.50 a month is for payments and for workflows. If you add the credit risk and the credit applications and the monitoring and the other stuff onto it, then it can go up to $1,040 a month. But that's for 500 debtors. If you've got a couple of hundred debtors, then the pricing's less. And I can also break out the payments module from the workflow module. So if you say to me, look, I just want a way for our customers to hit a pay now button on my invoice and pay me, and that written back, that is around about $330 a month. So, but really it's sort of based, that's just a very broad brush to give you an idea, but it's based on what your business is, what your needs are, and it's much better to have a one-on-one talk, do a demo with you, deep dive, and then look at your business model, and then we can work out something that either fits your budget or is tailored that solution towards you. So it's not a one size fits all, but that gives you an idea.
Yeah, no, that's great. Thanks, Graham. And for everyone on the call still, no doubt Graham will be in touch with you following this this webinar. And so, feel free to share with him your personal circumstances, and he'll be able to work out how best to help you and talk you through that. I don't see any further questions in the chat. So, Graham, any final thoughts?
There's a QR code on the screen now. If you scan that, that will give you my email, my mobile contact phone. So if you lie awake in bed all weekend pondering how you get your $250,000 overdue in quickly, just give me a call anytime, and we can move forward from that. So feel free to scan, Dave, and hopefully it works.
That's great. All right,
Graham,
it's been an absolute pleasure hosting you today, and thank you so much to you, and thank you for all of our attendees. Really appreciate you coming along, listening, and for your questions. Just as a reminder, you will be sent the presentation from this session following the webinar. Thank you so much to everyone, and appreciate your attending. Have a great weekend.
Thanks again, everybody. Yes, have a great weekend. Talk to you soon. Thanks.